Well, if we just look at and bring up the whole set of companies, which is the strong, weak, and inline set of numbers, the first numbers, and just look at this. In Q1 FY18, we had 14 strong companies, 19 inline, and 17 companies which had disappointed. This time around, maybe the analysts have gotten it right. 13 plus 25, that's about 38 companies out of the Nifty 50 companies which have either met estimates or come above estimates. So very few disappointments compared to what the estimates were. Keep that at the back of your mind. So 13, 25, and 12. And if we just look at the trends as well as I showed you, the number of weak companies have gone down. But this is the earnings scorecard. And you will see that I need to point out one peculiarity, something that I'll point out a bit later on as well, that the weak numbers also have two names which you shouldn't bother about too much because they can have a weak quarter but typically tend to recover. So that is something at the back of your mind. Keep that at the back of your mind. And SBI and ICICI Bank in particular had some silver linings as well. So that's the key thing as far as this heat map goes. Now let me try and tell you what did well and what did not. We've already told you the heat map. Now let's talk about select companies which either came out with good set of numbers or otherwise. So M&M, the only strong set of earnings that came out from the auto pack. Tata Motors had a very weak third quarter, and that continues. They somehow are not able to get out of the rut. And we already know what happened to the two-wheeler space, courtesy, of course, Bajaj Auto numbers, but that was not the only one. The others too didn't have a fabulous move this time around. So there's a bit of a issue when it came to the two-wheeler companies. What about L&T and some of the others? I think L&T met estimates after 3 strong quarters. The more important thing about L&T this time around was that their guidance on the order book, etc., seemed to be fairly strong. Cement was the next pack, and Ultratech underperformed ACC and Ambuja operationally. Yes, these two are not a part of the Nifty, but they are large companies. And when the first set of numbers started coming in from Ambuja and ACC, one thought that maybe the pack has turned around the corner, or maybe at least there are green shoots. Somehow Ultratech's numbers and even the mid-sized cement companies' numbers led us to believe that all is not necessarily well with the cement pack. It was chalk and cheese. Ambuja, ACC may have done well, the others probably didn't. What about the consumer space? I think here's where investors heaved a sigh of relief, because almost all the major companies that mattered came out with numbers which are fairly decent. So HUL and ITC met estimates. ITC in particular, the cigarette volumes drove the numbers, so fairly good quarter for them. Asian Paints, a strong set of numbers after 7 quarters of arguably lackluster show. And you saw that in the stock reaction the next day as well, or the earnings reaction that came in for Asian Paints. Fabulous move out there. And Titan Company too. I think the numbers were strong. Everybody remembers the con call wherein Rakesh Jhunjhunwala seemed to suggest that the management was underplaying the kind of growth that they can show in the next 2 or 3 quarters. So interesting moves from Titan. Let's see if there is more recognition of what they do if Q2 also turns out to be as strong. What about the oil and gas space? I think explorers and refiners by and large met estimates, to be honest. Reliance Industries though, very strong numbers. Petchem and Geo boosted earnings. The question mark only is, can this run rate continue? Especially in the telecom space. That's the key factor to watch out for when it comes to Reliance's numbers. And speaking of telecom, I think largely telco is posted a muted quarter. I mean, we only have Airtel to talk about. Idea has been lackluster and continued to be lackluster. A lot of concerns about the debt to EBITDA numbers for Idea, and how long can the bleeding survive before they have to make some serious moves to infuse some further cash to reduce debt. But telcos by and large not the best of quarters. Last but not the least, or maybe not last really, but just look at what's happened to banks as well. And this is where I want to draw your attention, that the Axis, by the way, came out with a decent set of numbers. So it was in line to marginally higher for Axis Bank. But the remaining 3 private banks, I wouldn't be too disappointed. Yes, the numbers look slightly weak. And yes, from a stock price perspective, Kotak has some overhang too. But HDFC and Kotak, you don't really think that one quarter will really define what the company is doing for the rest of the year. They have a very strong possibility, a higher than a 50% possibility of bouncing back, because they've done this consistently over the years. So don't be too perturbed by what's happened to these two. And ICICI Bank, while the reported numbers were weak, there were a couple of silver linings as well in those numbers. So interesting to see how the market has read into these. And remember, Morgan Stanley came out with a note saying that ICICI Bank was the top pick in the Asia financial space. IT, I think TCS was probably the highlight to my mind. The largest company, strong body language, very good performance. The others, you could argue that there were one or two things which stood out for Wipro, stood out for HCL Tech. Infosys was marginally weak. But large cap IT, frankly, if there is one company that stood out, that was TCS. The others were ho-hum, to be honest. So it was TCS all along. And Pharma, it was a complete mixed bag. So Sun Pharma, despite Taro's weak numbers, did extremely well for itself. Reddy's got the launch boost from Suboxone, may not last in Q2, so keep that at the back of your mind. Lupin disappointed, weak US sales, margins weak, so disappointed. Cipla by and large met estimates, so in line with what the street was working with. It's not a very heavy weightage on the index anymore, but well, that was the kind of performance. And it was a muted quarter, but a very strong commentary that came in from Z. All eyes out on the digital vertical of Z now. So what they do over the next couple of quarters on the basic broadcast space may not really drive the stock as much as the performance of the digital property. So that's something that you need to watch out for. But as the last piece, the last thing that we want to maintain on this earnings tracker is what happens to the earnings estimates. Now, the April 1st estimate was about 134 rupees. When July 10 is when the earnings season factually started, that EPS estimate for the first quarter dropped down to 122. The actual reported number is about 114. However, you got to mind out here, and I know we like doing, or sell side likes doing these X financials, X oil and gas, but frankly, in this case, had it not been for the loss number that came out as a surprise from State Bank of India, this EPS number would have moved up to about 120, which would have been in line with what the street was working with. So frankly, if you look at it, the broader market or the broader Nifty, save for one odd bank, has for the first time in a lot of quarters managed to perform in line with estimates and have a good start. It's just important for the finish to be good as well for FY19. We badly need one season of strong earnings before the next elections come in. So let's wait and watch if Q2, Q3 and Q4 manage to meet estimates.